What's up, everybody? Crypto Noah back with another video, guys. I know it's been a while. I went to ETH Denver and was networking for a whole week, and then I caught COVID and was down bad for a whole another week. So I am back feeling better, and I got a lot of content I'm going to be putting out over these next coming days, weeks, months. Also, guys, we released the world's first crypto album. It's called The Crypto State of Mind. It's live on Spotify, YouTube, Apple Music, all the major platforms. So you guys go and check it out. You just search on those platforms for Crypto Noah. It's the same as the YouTube. And I think you guys are going to like it. And we are going to be making a part 2. So guys, in this video, I'm going to show you guys all the ways that I'm taking advantage of what I think Pendle Finance will do in the very near future, which is explode in price. I'm going to show you guys my yield farming strategy and show you how I'm accumulating triple-digit yields by providing liquidity on Uniswap with Pendle-ETH. Show you which chain, my methodology behind it, my range, literally everything that went into creating the position. I'm going to give you guys an update on my Silo Finance Pendle leverage strategy. I did get to talk to the Silo Finance team at ETH Denver, which is how I got this shirt. So we're going to be going over all those details as well and just how this position fits into the grand scheme of what I think will be happening in crypto. So before we get started, do have to say none of this is financial advice. Consult with your financial advisor before making any investment decisions. Just use this channel as a starting point, but always do your own research. Without further ado, let's jump straight into it. If this is your first time watching the channel, let's start off with what is Pendle Finance. Now, I'm just going to cover the high level because we made an in-depth fundamental analysis on Pendle Finance, explaining literally everything about the project. But basically what it is it is a yield tokenization platform. So there's a industry in TradFi called bond stripping, where you can separate the bond from the actual yield. Bond is basically just a way to raise capital. So you have raised capital via equity, which is, hey, here's equity in my company, give me money. A bond is a way to raise capital via debt. So they say, hey, give us a loan, we'll use it to grow the company or grow whatever the bond is for, and we'll pay you back with interest, okay? So in TradFi, bond stripping, like I said, allows you to separate the principal from the yield, but you can only speculate on current principal and current yields. Pendle Finance allows you to speculate on future principal and future yield. So if you think the APR for ETH staking is going to go up, you can long the yield, vice versa on the way down. Same with the principal. You have a lot of projects that offer different yield strategies, private credit, etc. Did a partnership with Maple Finance. A lot of projects are partnering with Pendle Finance. And if we look at DeFi Llama, you can see that it is $86 billion in total value locked, right? We got this big decline. We're still within that trend line, so I still think we're going to be going up, as we go later into the year. But if you look at all of the protocols, you can see that Pendle Finance is number 6 and TVL and all of DeFi is the top yield-bearing protocol, right? In the past 30 days, they've all seen outflows, but Pendle Finance has seen the least in the top 5 other than Athena Finance, okay? It still has $4.5 billion, right? And it's still making around 19 grand a day, right? While Athena Finance didn't have as big a drop, I'm not sure why it's showing the revenue. Maybe it's not showing the revenue on there. I don't know if this is correct, but it says 0 here. So the fundamentals for Pendle Finance are still very strong. They still are tweeting every day on Twitter, new updates, new partnerships, new XYZ, right? And the product still works. And if we look at the Pendle Finance price, you can see that the market cap is 323 million with the FDV of 505 million. So not too much of a disparity, meaning not that many more tokens has to come onto the market. So I like the tokenomics of Pendle Finance. In addition to that, I just showed you guys they have over 4 billion on their platform. The fully diluted valuation is only 505 million. So you have a TVL that is higher than the market cap, offering a very strong market cap to TVL ratio. And if we look at Pendle's chart, you can see that we are at support levels that, every time we get back to this level, you see what happened last time, we see the strong bounce. And guys, I will say that it is still a possibility that we can go lower. And if we do, I'm just going to keep buying. If we go to Silo Finance and just look at my position here, you can see that I deposited 14K to borrow 8.5 thousand, right? And what I like about Silo is that it tells you your liquidation price right here on here versus on Ava. You have to do the math for yourself. But I won't get liquidated unless Pendle Finance hits $1.52. And I'm actually going to add a little bit more liquidity so that I can bring my liquidation price to probably around 99 cents, because you never know what can happen. And you don't want to get liquidated before, we go to the moon, right? Like that will be the worst thing. So for those of you who stuck around, now that I covered my leverage strategy and my thoughts on Pendle and all of that, let me show you my Pendle-ETH yield farming strategy. But before that, I do have to explain what yield farming is in case this is your first time on the channel. So yield farming is just a way to get a yield through different methods of staking. You can stake on a borrowing and lending platform to get a yield for the platform to loan out your funds. You can stake on an insurance platform and you get a yield when they pay out insurance premiums, right, for you providing liquidity. You can stake on a blockchain staking contract like the ETH 2.0 staking contract and get a yield for securing the network. But the way that we're talking about, that we always talk about, and the most profitable way to yield farm, at least right now, is providing liquidity on decentralized exchanges, staking your funds in the form of pairs, and you get paid in the pairs that you provide liquidity in anytime people swap back and forth. So in this example, we're providing liquidity in Ethereum and Pendle. So anytime people swap Pendle for ETH or ETH for Pendle, we're getting paid in ETH and Pendle. Now, why am I providing liquidity for ETH and Pendle? We'll always say, never provide liquidity for any two assets you wouldn't mind holding on their own, because if it goes out of range, you can be holding that loser, all of it, and lose the other asset, right? So don't provide liquidity for any other assets that you wouldn't mind holding. And I hold a big bag of Pendle and a big bag of ETH. And I would like to grow that bag, which is part of the reason why I'm providing liquidity. In addition to, it pays well. And I'm going to show you guys how I go about looking for the best places to provide liquidity. All right, guys, so this is our proprietary Yield Hunter tool. If you want to get access to this, click the link in the description and book a free strategy session. You'll talk to me. We'll see if our program is a good fit for you. If it's not, we're happy to point you in the right direction, right? But we do have a 14-hour yield farming course. We have a growing, vibrant community where we all have each other's best interests. We're doing multiple calls per week. If you can't make it, we record the calls. Our goal is to essentially help everyone take advantage of not just crypto, but the best yielding opportunities that DeFi has to offer. So if that's not of interest to you, at least click the link and join our free group, where at the very least you'll get tons of free stuff and a weekly market update video for me that I don't post on my public YouTube. Okay, so go ahead and join our free group. Love to see you inside. Anyway, so you go on here and you type in Pendle, and it gives you the best places to get a yield on Pendle. Now, I want to go Pendle-ETH because they've been kind of moving in tandem, as you can see the correlation here. And I did get into my Pendle-ETH position on Ethereum, not just because it paid the most, right? You can see Pendle-ETH 120% APR, but you also have Pendle-ETH on Arbitrum 48%, right? 38%. And you're probably asking, well, why not go on Arbitrum where the fees are low and this and this? Well, the answer is actually pretty simple, and this, you have to really do some thinking to think about this. When you're providing liquidity, it's not all about the now. You want to get ahead of where you think the volume is going to go. Like, you want to anticipate the volume. And the reality is that there is billions of dollars in liquidity on ETH. People who bought ETH at the top last cycle, 5K, 4K, who hasn't taken profits yet because they know ETH's going to go up, so they're just holding it, right? And what happens every time ETH moves? It causes a major altcoin cycle. Right? And when I say it's a lot of liquidity, it's a lot of liquidity on ETH mainnet. Yes, people are holding ETH on Arbitrum and Polygon and Optimism, but most of it is on ETH because it's the most secure. So I believe that once ETH pumps, people are going to take profits in their ETH and they're going to speculate on other altcoins such as Pendle because the fundamentals are so strong. And they're either going to not know how to bridge to another chain and just buy the Pendle on ETH mainnet, or they're not going to want to take the time to bridge, or the most important one, risk bridging, because when you bridge, there are security vulnerabilities. So a lot of the whales, they're just going to be like, well, I got all this profits in ETH, these millions of profits. Let me go on DeFi Llama and look at DeFi and see which projects are doing the best fundamentally. And then they're going to run across Pendle. Has great tokenomics, great team, all the stuff that we talked about in our fundamental analysis video. Subscribe to Know It Alls and give that video a watch. So I think there's going to be a lot of buying on ETH mainnet in the near future, and I want to capture all that yield for Pendle when it does do that. So that's the biggest reason why I provided liquidity on Ethereum mainnet, even though it's going to cost me a little more to rebalance, etc. Now, here are my ranges. Now, I put most of my money in this green range, and I put a little less in this yellow range. And the reason why is because I want to capture optimal yield for now and optimal yield for the future. What do I mean by that? Well, there is something called time in the market versus trying to time the market. This chart shows the value of $10,000 invested into the S&P 500 from 2003 to December 2022. Now, if you invested all days, 10K would be worth 64,844 at the end. If you missed the 10 best days, your 10K is only worth almost 30K. So performance is basically cut in half more. You missed the 20 best days, your 10K is worth 17K. If you miss 30 best days, your 10K is only 11,700 bucks. If you miss the 40 best days or more, you actually lose money. Going back to this, it's the same thing in yield farming. Like, you want to be in the market for the best days. And some of the best days in this range are these candles here. Because when you're providing liquidity, remember, you're getting paid off of volume. So you want to be in range when you get these big volume candles because it drastically affects your performance. Just like in the stock market, you want to be in for the best days and not miss them. But you never know how long something's going to consolidate, like how it is in this yellow range here or how it was in this green range. The tighter your range, the higher your passive income. The wider your range, the lower your passive income. But you can do both and get the best of both worlds. Seriously, you get the best of both worlds. So I put a little less money in this yellow one so that as long as it's chopping in here, I'm maximizing my yields. And I put most of the money in this green one so that once Pendle decides to move and I get one of these big green candles, I can capture that yield. And what you'll find is the rewards end up being the most because the small one is paying out, the smaller range is paying out so much more than the larger one. Even though it's less funds in there, it ends up being the same. And if we go over to revert, my wide range is, and it's my principal's down a little bit, but that's okay. My wide range is paying out 63% APR. Right? And remember, in any moment, this can go up. All we need is a big green candle or a big red candle. And I've only been in this thing for 4 days. So not too long, not even a week yet. And my wide range is paying 109% APR in here. You see this? This one has 1,800. This one has 3,200. And you can see that the fees are around the same. So with this, I'm going to just be taking my rewards. I'm going to be keeping it in Pendle and ETH because I want to accumulate as much ETH as I can and as much Pendle as I can because ETH has yet to moon, and we have never had a major crypto cycle where ETH has not exceeded all-time highs. I mean, it is number 2 on DeFi Llama in terms of chains TVL. I mean, it is number 1 actually, right? And by a long shot. Like, you have a TVL of 44 billion and Solana's number 2 at 6.4 billion, and everyone else is just kind of behind. Like, even with the withdrawals over the past month. So guys, with that, I'd like to conclude this video. I hope you got value. If you did, consider dropping a like, drop a comment, subscribe, help us reach 3K, share with a friend who is curious about crypto. And again, guys, definitely check out the Crypto State of Mind. The album is fire. I think you guys are gonna like it. We just wanted to make something for you guys to ride to during this 2025 bull market, whenever it turns back on. So with that, thank you guys so much for tuning in. I love every single one of you watching. And I will see you in the next video. Take care and trade safe.